Hello and welcome to Inside India. I'm Manisha Tank. Here are your headlines this hour. President Donald Trump strengthens the U.S. alliance with Japan ahead of that potential meeting with Chinese leader Xi Jinping at APEC. Kaori and Joji is on the ground for us in Tokyo.
A flurry of activity here in Tokyo as Sanai Takaichi, the new Japanese prime minister, sat down face-to-face for the first time with U.S. President Donald Trump. A lot is on the agenda, including rare earths, cars, pharmaceuticals, you name it. We'll talk about the implications later on in this show.
And China strengthening ties with Southeast Asian countries at the ASEAN summit with an upgraded trade pact. JP Ong is in KL, Malaysia.
Yeah, good morning to you guys from Kuala Lumpur, Malaysia. And again, as President Donald Trump meets with Sanai Takaichi in Japan, China is holding court in a meeting with the leaders of Southeast Asia to upgrade version 3.0 of this free trade agreement. We'll go into the details of what's behind that later on.
And we'll be watching India's state-run banks after a Reuters report that the country is planning to allow greater foreign ownership in the sector. Hello there, live from SGX Singapore. It's Inside India. Thanks for joining us. Let's first of all take a look at how Asian markets are faring this session. And actually, we're seeing a little bit of a pullback after record highs on the Nikkei, for example. All of this as U.S. President Trump makes a sweep through the region, meeting with Japanese officials today. And of course, everyone looking forwards to Thursday, where he may meet the Chinese and Xi Jinping. Asia stocks did surge on Monday after the announcement of a framework for a U.S.-China trade deal. But also, we are looking forwards this week to a lot of big tech earnings coming out of the United States, and the U.S. Federal Reserve is starting its two-day rate-setting meeting later today. So there is a lot for investors to occupy themselves with. The India markets, meanwhile, come online in about 45 minutes from now. So here's what GIFT Nifty futures are indicating, with the Nifty 50 finishing on a strong note yesterday. Right now, we are looking at a muted start to the session. The stronger notes were coming through on global cues, and it hit that 26,000 mark during the session, but it did fail to retain it to the close. It's become a bit of a congestion zone, say the analysts for the Nifty. And you've got big cap stocks such as Reliance Industries, part of the Airtel, SBI, providing most of the support. Kotak Mahindra Bank, meanwhile, Bajaj Finance came under selling pressure and ended among the major laggards. One of those, of course, reporting earnings. Well, the U.S. President Trump is in Tokyo, Japan. It is the second leg of his Asia tour, and he met Prime Minister Sanai Takaichi for bilaterals this morning. The new Prime Minister in Japan has had a very, very busy start to her premiership. CNBC's Kaori and Joji is in Tokyo. She's been keeping track of this story. Quite the charm offensive going on, Kaori.
Absolutely, and very busy she has been, Manisha, because this is bookended by key meetings elsewhere in Asia as well. What's happened so far as U.S. President Donald Trump, landed here last night is that he was welcomed by the Emperor. This is the first visit by U.S. President Trump since 2019, in 6 years. And today is when the big business goes on. She had the face-to-face first time with Sanai Takaichi over at Akasaka Palace. They inked an agreement whereby the two sides agreed to work together to secure critical minerals and rare earth supplies. Japan has experience in this because they faced a trade embargo from China a long time ago as the two argued over a territorial issue. And of course, the defense is featured very high in this agenda. And the two will be going aboard Marine One and visiting Yokosuka Base, which is where a lot of U.S. troops are stationed. And I think Japan in particular wants to reinforce and send a message that the alliance between the U.S. in terms of security is rock solid in the face of a nuclear threat, not only from China, but North Korea and Russia on its doorstep. And of course, as part of this charm offensive, don't forget Japan Inc., because Japan Inc. and the government usually work in lockstep on these kinds of missions. And there will be a business meeting later on tonight headed by business dinner, I should say, headed by Akio Toyoda, because cars, of course, have been at the front and bearing the brunt of these tariff negotiations over the last 6 months. And don't forget what's looming large over all of this. And the invisible thread has been the late Prime Minister Shinzo Abe, who Trump calls a friend and who the Japanese Prime Minister calls a mentor. And his wife, Akie Abe, may also be meeting with the president. But just moments ago, he did meet with the families of the abductees, North Korean abductees. And this has also been a matter that's been close to Shinzo Abe and, of course, Takaichi. Manisha?
Okay, so there's quite a bit of posturing going on in terms of the geopolitical side of things as well as the trade part of stuff. Let's talk about the trade. As part of the first trade deal, Japan had pledged to invest $550 billion into the U.S. But give us more details of that and whether or not you think that Takaichi will stick to that commitment.
Well, I know there was some language that she used before she entered the race to become prime minister, saying that, look, if it's not in our interest, in Japan's national interest, then I'm going to push back. And I think a lot of it has been made of that. But I think since then, she's toned down her rhetoric a lot. And I think it would be difficult to imagine, especially now, for her to revert to that. The $550 billion investment pledge is a huge deal. We really don't know where that's headed, but we're getting a flavor of it. Lutnick is in town, and the other ministers in charge, and Ryosei Akazawa, who led this shuttle diplomacy, has been meeting with them over the last couple of days. And Lutnick has told the local press that what's going to be included in this are mostly infrastructure projects, so power, pipelines. We're also hearing from Reuters recently that they're going to produce a fact sheet. I think this is critical because remember when the agreement was inked in July, there was nothing in writing and there was a lot of back and forth about what was said and what was actually agreed upon. But Reuters is saying that they're going to outline in writing the potential investment projects that may center around power generation, which gels with the comments that Lutnick made, maybe some auto-related issues as well, and maybe even name some names as well. And I think shipbuilding, Manisha, has come up as a potential area that they can cooperate.
Kaori, thank you very much for that. And it's very interesting, given what you're saying, that there has already been a statement from the White House about the framework around the rare earths, critical minerals conversation. So, yes, it is a very important point, what actually goes down on paper. Okay, as President Trump continues his tour of Asia, the Fed will be kicking off its two-day policy meeting. It starts today with a 25 basis point rate cut baked in for later in the week. That at least is how the markets are calling it. U.S. Treasury yields ahead of that. Obviously, we're keeping an eye on those. You can see pulling down on all those yields. It's going to be a big week, and we have a lot of tech earnings coming out of the U.S. this week too. And we had that cooler inflation report last week. So that certainly bolstering that call amongst a lot of the analysts that there may be this, we may see this basis point cut from the Fed. Anyway, all of this new flow is coming with the ASEAN summit continuing in the Malaysian capital, Kuala Lumpur. There's been a lot of news flow from there, a lot to digest. There's also the ASEAN-China summit that's taking place this morning alongside other proceedings. It's good that we have JP Ong, who's been busy on the floor speaking to some of the key voices on the sidelines. Pull it all together for us, JP.
Yeah, good morning, Misha. We'll try our best here, but there's a lot of moving parts. But definitely the highlight for Tuesday here in the ASEAN Summit in Kuala Lumpur, Malaysia, is that ASEAN-China Summit. 2 days after President Donald Trump of the United States made his pledge that the ASEAN bloc has the 100% support from the United States, it's China's turn now to bolster ties. And of course, alongside this is the upgrading of the free trade agreement that China has with the ASEAN bloc. This is version 3.0, and this time around, as part of this upgrade, we're also going to be expecting more collaboration and more opportunities to deepen ties with regards to strengthening the digital economy, and also looking at the green economy as alongside opening markets even more and lowering tariff barriers. This is, of course, in line with China's clarion call that's been consistent over the last couple of months to promote the multilateral trade order and to uphold the principles of free trade to try and deepen relations and offset any impact or negative impact from the tariffs unleashed by the Trump administration. Now, all in good because we are seeing also signs that the U.S. U.S. and China might be holding those pull-aside talks at the APEC summit in South Korea later on. But again, the question is, has the damage been done already to the global world order, or the global economic order, that is? Well, according to Christina Georgieva, who's the managing director of IMF, she did say that that the bad news is that that this might be the new normal, but so far we've seen that economies have been more resilient than others actually assume. Here's what she meant as part of her long conversation earlier this morning on the sidelines of the ASEAN summit.
We're not going to go back in the world we had before. We are moving forward, and as we do so, we need to ask ourselves, how come that global growth is holding so well despite of all the uncertainty? I mean, globally, we went from 3.3 to 3.2% this year, 3.1% next year. When you unpack this resilience, what you find are three things. One, strong fundamentals. Independent central banks, fiscal policy that is well grounded in good analysis. Two, private sector. Across the world, especially here in ASEAN, the state has moved out of running the economy to allowing private sector to do so. And this adaptability, agility of private sector matters tremendously. So if you still have red tape for private sector, get rid of it. And three, the world continues to trade quite actively, despite the tariffs that have been announced. 72% of global trade continues to be based on most favored nation rules. So we are seeing a world that is more integrated than we would have thought before, and this integration is holding us stronger.
So resilience is something that was highlighted by IMF Managing Director Christina Georgieva, but of course, resilience can only take you so far. There will be a need to try and smoothen the uncertainty that was really a dark cloud that is over economic outlooks across the world. It's something that many countries will have to grapple with, but with strong fundamentals, it might help batter down the hatches at least. Definitely something to watch out for. And again, this all points to why it's important, or why the upcoming possible pull-aside talks between U.S. President Donald Trump and Chinese President Xi Jinping will be very important when it happens, and if it happens, at the APEC summit later on. Manisha, it's back to you.
JP, thank you so much for that. I think we're getting an underlining of how important Asia and the Asia-Pacific is for global trade and the global economy. Now, coming up on Inside India, we will talk about India's efforts to shift to clean energy and the role of finance in getting there. Luca Tonello, Chair of Sector Banking and Energy Infrastructure, APAC at CNBC, will be joining us after the break. welcome back to Inside India. I'm Anisha Tank. Thank you for joining us. Now, Qualcomm is betting big on AI. The chip maker unveiled 2 new artificial intelligence chips for data centers. The AI 200 and the AI 250 chips are designed to handle complex AI tasks and will hit the market in 2026 and 2027. The move marks Qualcomm's push beyond smartphones, taking on NVIDIA and AMD in the AI data center space. The company also announced a deal with Saudi AI startup Humane, which will deploy 200 megawatts of its new AI racks from 2026. Investors cheering those announcements, the shares jumping double digits in U.S. trade. Quite a pop to the upside for Qualcomm. For more on that Qualcomm story and details on its tie-up with Saudi startup Humane, tune into Squawk Box US tonight. Sarah Eisen will be speaking to Qualcomm CEO Cristiano Amon from the sidelines of the FII conference, which is taking place in Riyadh. Now, back to India, and New Delhi's push to boost electronics manufacturing just got even bigger. The government has cleared 7 projects worth over $626 million, all of it aimed at building up India's component-making capacity. 4 of those projects come from Kaynes Circuits India, covering circuit boards, camera modules and laminates. The projects spread across Tamil Nadu, Andhra Pradesh and Madhya Pradesh are expected to create over 5,000 jobs and produce parts worth 365 billion rupees. It's all part of India's bigger plan to cut imports and beef up supply chains in defense, telecom, EVs and renewables. And as India pushes to cut its import reliance, the government says export markets are starting to diversify too, even as trade talks with the United States continue. In its September economic outlook, the government points to strong domestic demand, cooling inflation and recent tax cuts as key drivers of growth through March. The report also notes that prices should stay stable, supported by a healthy outlook for food production, despite patchy weather and low crop acre age. And energy is front and centre for that economic growth, of course. India's crude oil imports climbed in September, hitting the highest level since June. Government data out on Monday shows that imports rose 1.7% month-on-month to nearly 20 million metric tonnes. On an annual basis, September crude imports jumped more than 6% from a year earlier, and imports of refined products also surged almost 21%. Pressure on Russian oil flows remains in focus. The EU, UK and US have all stepped up their sanctions on Russia over the war in Ukraine. That includes fresh US measures targeting Rosneft and Lukoil. Indian refiners are now expected to sharply scale back Russian purchases, a move that could help ease trade friction with Washington. Russian oil imports to India have already fallen more than 8% between April and September as discounts narrow and supplies tighten, prompting refiners to turn to the Middle East and the United States. Well, Luca Tenano is chair of Sector Banking and Energy and Infrastructure APAC at SMBC. He's also the board member of ASEAN Infrastructure Finance. He joins me live in the studio to talk a bit more about this. So, of course, India has ambitions as an economic power, but behind all of that, you actually need energy to fuel it. And Russia has been offering huge discounts on Russian oil. It is one of the reasons we've seen such a large increase in imports of Russian oil to India in recent years, post the situation in Ukraine. So, Luca, the question then becomes, how does India bridge that gap when it comes to energy? That is the big question that we can start with.
Yeah, indeed. I think India is a very dynamic marketplace with very dynamic government and leadership. So they respond very quickly to what's happening outside of India. I think they have already demonstrated overnight. They're obviously pledging to import more oil from other regions, also including the Middle East. But what's most important, India has made a big bet to rely on its own resources, in particular renewable, clean and low carbon energy sources, of which India is one of the world leaders. Certainly in terms of the speed of implementation of these new sources, the economic impact that it has, because these sources are very, very competitive. India is one of the lowest price solar sources for the power sector. And India is taking full advantage of that. It's growing very fast. It's adding capacity every year. It has targets to build 500 gigawatt of clean, low-carbon energy by 2030. They are halfway, and they are adding about 50 gigawatt every year. And my team and I and our institution, SNBC, is doing a lot to support that growth.
You throw these numbers at me, okay? but can we understand them in the most real sense? So when you talk about what was it, 500 gigawatt?
Yes.
What does that actually mean when you're a town, when you're a city, when you're a bustling metropolis like Delhi or Mumbai? What does that really mean?
It means, that, first of all, that you have more clean energy to also electrify your economy. And India, for example, has already started to invest in electrification of public transport. And we have also been part of that process with supporting some of the local developers. The way it works is that the local authorities, the city government or the municipality or the regional government, the states, they may award a contract to new operator who they convert the fleets of fossil fuel diesel buses into electric buses. Obviously, that means that you will have less polluted cities. I mean, we have seen already great example in other countries where this actually has a material impact on life. And I think the ability to also produce electricity in a greener way, it has obviously a positive impact overall in society. The reality is this is a long journey. India still relies for 80% on fossil fuel for power generation. Last year it produced about 20% from low carbon sources, but the installed capacity is getting closer to 50% of the overall installed capacity for energy. So the journey is moving very fast.
Yeah.
In fact, India is one of the most dynamic market for many global investors, and we like to be in that market very much.
Okay, so you have projects that go all the way from sort of the smaller to the bigger infrastructure projects. So some of the Indian government figures have pointed to a double-digit trillion sort of level of investment that will be required. So whether it's solar, it's wind, but I think the acknowledgement is that when it comes to energy, there needs to be diversification. It cannot be a reliance. We have to move from this reliance on oil. And obviously, it's such a very finely balanced conversation when it comes to commodities in particular, but oil, of course, because it's geopolitical, it's energy, it's the future of the country, right? So then what comes with that as you diversify into these more renewable, more self-sufficient versions of energy?
I would say the first thing many governments think about, and including India, of course, is security. And India doesn't have a lot of oil. It has some domestic gas, but for the demand of energy that it has, and gas is still a relatively small contributor to the energy mix. So it has to invest in all the sources that potentially has available. And even with those, clearly, and the economic growth that India is facing, demand for electricity may be around 7 to 8% in line with economic growth. The energy demand is huge, so the government clearly is under pressure to maximize all the sources that it has, a mix of fossil fuel base and obviously low carbon base. I think they are doing a phenomenal job in promoting the low carbon ones, but it takes time. What we have learned about energy system in the last few years is obviously, well, it's always been the case, but you can't switch energy system overnight. And sometimes the expectation that these things happen overnight create some anxiety in the public that obviously everybody has a clear stated objective of decarbonize and reach net zero, but you have to do it through a process. And India is investing to accelerate that process. And a lot of the global fund investor, from pension fund to global infrastructure investor, are all very active in India to be part of that journey.
Well, that's what I was going to ask, because it's really costly. An infrastructure build, doesn't happen overnight. It needs a colossal amount of money. Has that finance been forthcoming? You say that, pension funds are looking at it, funds are looking at it, but it's a huge number.
It's huge. I mean, the headline numbers are always in the trillions. The good news is that a few things are happening. One is that a lot of the big asset managers are all decided to allocate more capital on the back of some success stories around the world, more capital to invest in infrastructure. So infrastructure has become an asset class per se, alongside real estate and leverage finance, for example, and this asset class has been growing very fast. So, and also you have pension funds there, because pension funds have long-term liability, they need long-term assets. So investing in airports, road, power plant, and infrastructure that is resilient and makes economic sense is a perfect logical. Infrastructure also performs quite well. If you look at global study on the debt market, it's typically rated at around A minus. So it trades a lot better than sometimes most people perceive it to be. So it's very attractive. So it means that a lot more capital is going in. But capital alone is not sufficient. You need a lot of effort from governments. And in that sense, actually, India has done a phenomenal job in the last few years. They have made a lot of effort to simplify the bureaucracy and the permits around projects, which is typically where things get stuck. Land access or access to transmission, in the case of renewable, for example.
And are we seeing that consistent across, you know, the nation's government, the union's government, but also the state governments? Because you've got to get past the local, the local infrastructure.
Indeed, and this was in the past an issue. I think that the central government had done a very good job to manage this, also to ensure that contract sanctity is preserved. So if there are contracts with power producers, which are typically long-term contracts, and they are not honored by the states, the central government intervenes. They created an institution that is called SECI, that is an intermediary, a kind of sovereign-rated or quasi-sovereign status entity, which is in between the central government and the states. And that has allowed to de-risk a lot of the investment that has gone into renewables and energy in general, which is why many global investors are now very active in India, and we are.
Okay, just a final word and a brief one, Luca. In terms of achieving the targets the government has set, you say we're halfway there. Are you ambitious? Are you bullish about this, getting to the goal by 2030?
I am very impressed by the speed and the commitment that India has shown to investors or in financial institutions like ourselves. I've been traveling to India for the last few years, and I've been starting many years ago, 15 years ago, the first time. It has changed incredibly. And the passion of entrepreneurs, government, even the bureaucrats, they don't even talk like bureaucrats or what you imagine a bureaucrat would normally say. So it's very impressive. So we are quite optimistic. CNBC is very optimistic about and committed to the growth in India.
Okay, well, you know, your action and your engagement proves that point. Thank you so much for being here. Luca Tonello, CNBC. Thanks for joining us. Okay, coming up, the tariff threat is looming large for Indian pharma giants that count the U.S. as one of their biggest markets. We'll get you an exclusive conversation with the CEO of Dr. Reddy's Laboratories, where we ask him about business from America, product pipeline, and much more. Stay with us. Welcome back. You're watching Inside India. We're broadcasting live from our Singapore studio. Now, we are counting down to the market open in India. This is how things are shaping up right now. Futures pointing to a positive start for the Nifty. It's expected to open past that 26,000 mark. And there are a lot of earnings in the fray today that could be moving the market. So keep an eye on things. Auto majors, Mahindra & Mahindra, TVs and two of the Adani Group companies reporting their numbers later in the day. And of course, investors in India will be looking forward to that Fed rate meeting, which is kicking off today, will last 2 days. And we will hear what is happening to US interest rates by Wednesday. Now, India is considering a major policy shift, allowing up to 49% direct foreign investment in state-run banks, more than double the current cap. Reuters is reporting that the Finance Ministry and the RBI are in talks on the plan, which could help public sector banks attract much-needed capital as credit demand surges. The move would also narrow the gap with private lenders, where foreign ownership is allowed up to 74%. The news sent the Nifty PSU Bank Index to a record high. It jumped to over 3% in Monday's trade on those reports. The government is expected to keep a 51% minimum stake in all state-owned banks. Well, as we've been mentioning, we are in the thick of the earnings season in India. The pharma giant Dr. Reddy's Labs reported on Friday, and CNBC's Amitoj Singh spoke to the CEO of the company. He joins me now in the studio. Not the CEO, but Amitoj. Thank you so much for being here with us. So tell us, what did he have to say?
Well, he had a lot of things to say, and I'm going to cover three primary areas. One, of course, is the earnings. We'll come to that in just a bit. And then, of course, there's tariffs. Everyone's thinking about what Donald Trump will do next. And we will also talk about this going forward strategy of this company, Dr. Reddy's Labs. But let's start with the results. We're seeing that the market hasn't really, taken this particular result badly. In fact, it's gone slightly up, the stock price, to about 1285. We'll bring that up. But also, if you look at the numbers, this is one of the biggest pharma companies in India. It's about a USD 12 billion market cap. We're also talking about Q2 earnings here. And what's happened is that the second quarter profit was up by about 1% quarter on quarter and about 7.3% year on year. But the key here is that it was still below analyst estimates per LSEG. And we've been kind of prepared for this. They have been prepared for this because they've said that we are likely to get hurt because of stiff competition for the generic version of their cancer drug, Revlimid, in the US, which is, of course, their biggest market. This has been known, like I said, because the patent out there is set to expire in January. Now, the strategic shift that they are making because of that, and that's what you're taking a look at on your screens right now, is that they're moving away from North America slightly. They're focusing on India, Europe, emerging markets. And they have a four-pronged strategy. They've been talking about this for months. They've reiterated it. They're sticking to their guns about it. The first is that the base of business, the sales of their established long-standing products like branded generics, biosimilars, and over-the-counter products, they need to continue to be in the double digits according to them. The second is timely product launches of big prospects like semaglutide, the weight loss drugs better known as Ozempic, for example. Reduce costs, that's a big thing. How they're going to do it, we don't know. The details of that remain sketchy. And of course, the final thing, disciplined investments that they're thinking about. We know that they've already made a couple of them. The previous acquisition of the non-US business, Haleon's nicotine business, that was quite interesting. It has helped them showcase some dominance in Europe with the nicotine replacement theory business, and of course a geographical shift. They are going to be moving away from the US. They will not leave the US. That was made very clear to us. And of course the pharma tariffs. What they've said is that so far they're going to assume that they will be facing 0% tariffs on generics. But when it comes to biologics, they don't know. They are saying it's a wait-and-watch game. And this was the interview that we had with, of course, the man of the moment, the CEO of the company.
So the beauty about it is that we knew it is coming because there is a certain date and we know it for quite some time. We have four levers that will offset that, and which some of it you saw in the quarter. One is that the base needs to grow at least double digit. Second, we need to contain the cost in a way that the cost will grow less than the sales. Actually, we are aiming for half of the sales. So it means that to contain it accordingly, we are growing the cost to allow the growth, but with very measured way. Number two, we are focusing on big products that can generate significant revenue in the future, like semaglutide and abatacept. And last but not least, we are very active on business development. We have a very strong balance sheet. We have no debt. And we have enough capital to acquire or to licensing many products.
Yeah, we're going to get to some of these other drugs. So how quickly can branded or specialty drugs really offset the decline in the U.S.?
First of all, it's already doing it there. It's in transition. You know, some quarters better than the others, but it's already doing that. In India, for example, most of our growth are coming from innovative products that we are bringing from top-class companies, and we bring in a better standard of care to the people of India. That's how we grow in India. So in India, it's already the game. In a place like Europe, the consumer care, especially the nicotinell, helped us a lot to grow. Europe, for example, you compare it to 6 years ago, we are like 9 times bigger. So it's primarily because of that strategy. And emerging market, it's primarily about leveraging the US portfolio and as well as innovation. So we are trying mixed types of the models to grow, but it's already in the work. Let's say in 2028, and I know to many people it sounds like a long time from now, people will see a very much bigger company in a very, very different scope of activities.
All right, because you brought up nicotine replacement therapy, we want to talk about its portfolio that's driven triple-digit growth in Europe. Is consumer health now a core pillar of Dr. Reddy's strategy?
So it is. It is important for us, being a sticky business, that is actually on the back end is a generic type of a product, because these are all patent products. The way you make them, the way you develop them is similar to generic products. And on the front end, these are products that people will need for forever. As long as they are smokers, they will need smoking cessation products. And we felt that this is a great place to sustain the company, especially when some of our business models contain high price erosion, which you need to work on new products to offset that. This is a different, much more sustainable business model.
Yeah, I want to talk about that because it's not just Europe, it's India, it's emerging markets. There's a structural shift you're seeing with how Dr. Reddy's future growth might just evolve. What will the revenue mix be from these geographies in the medium to long term?
Yes, so indeed we do see India, primarily India, we see it as our number one market, as well as emerging markets in Europe, as well as services, global services that we are giving on API and others, being the core activities that will grow Dr. Reddy's. We will stay in the United States. United States will always be important to us, but the other markets will grow much more. So you're going to see more consumer care driven, more innovative, more biologics, by the way, more anti-cancer. That's Dr. Reddy's of the future.
Now, you talked about anti-cancer. I want to bring up Alvotech, the tie-up that you've had to develop a biosimilar of Keytruda, one of the world's top cancer drugs. What's your commercial strategy, co-marketing, licensing, or global filings? Because the deal announcement said the two parties will be jointly responsible for developing and manufacturing, but we were missing the specifics.
Yes, so it's a partnership. We share the cost, we share the revenues. At the same time, we will be responsible for the commercial activities. So we're planning to sell this product worldwide, starting from India, but it's the United States, Europe, and every country that will accept our product. This is a very, very important product. Once it will be off patent, many, many more patients will get access because the prices will be very different. And we believe that it's a great value that we can add to the world.
All right, let me try to pin you down, put you in the hot seat. What proportion of revenue are biosimilars expected to contribute compared to generics? And does this Keytruda deal help offset the challenge of Revlimid coming off patent early 2026 and keep Dr. Reddy's in the oncology segment?
So biosimilars will be more than 20% of our sales in the future, but this is not going to happen tomorrow morning, and it will not be relevant for the Revlimid situation. This is from the 2030. Just the product that you mentioned, the biosimilar for Keytruda, will be launched in 2029. So in pharmaceutical, you are working for long distance. We are already developed for products for 2035 or 2040. You need to start ahead of the time to do that. But absolutely, it's going to be very, very significant segment. The way to address the current challenges, it will be what I told you: grow the base, contain the cost, BD, etc.
Dr. Reddy's is among those Indian pharma firms gearing up to supply the basic ingredient that goes into making copies of the weight loss drug famously known as Ozempic or Wegovy. Now, this is possible because Novo Nordisk AS is losing its patent protection next year in several markets. Cipla and Eli Lilly have also announced a deal to sell Lilly's popular weight loss drug under a separate brand in India. So there's a lot of things building up. What's the outlook for your weight loss drug, the competitive reality, and progress for that?
Yeah, so the product is losing its patent in India as well as in other countries. And therefore, it's open for a company like us to launch it. We are preparing for it for the last 10 years. So it is not an activity that you can arrange very fast. We are making the API, we are making the drug products, we are going to sell it in 87 markets actually, either by us or with the partners. The main markets will be the markets that will be open: Canada, India, Brazil, Turkey, and every year more and more markets will be open to this product.
All right. Again, I know that it's very hard to give a clarity on the timeline of the launches in India and the nearly 87, 90 countries that you just talked about. But without giving us a month, can you give us a time frame?
No, actually in India I can give a month. The patent expiration is March. And March 26, and this is when we plan to launch upon patent expiration. So in every place that you have exact months, you can actually predict that. In some other markets, you need to get a license from another markets. It's a bit technical, but it's called the COPP. You need a license from other countries in order to launch for the others. So then it depends on the regulatory authority. So the time frame that all 87 markets will be in the next 18 months. India specifically will be in March.
All right. It's always about those regulatory approvals. Now, I just want to move to that particular word that is making the entire world shiver: tariffs. In late September, U.S. President Donald Trump announced 100% tariffs on pharmaceutical drugs effective October 1st, but they would not apply to companies manufacturing in the U.S. How has this impacted you? Because you did sell a plant in Louisiana, and how could this recalibrate your plans going forward?
So obviously we did not see the guidelines yet, but right now it looks like that the tendency of zero tariff for generics. So if this is the case, and if it will stay that case, there is no impact on us in the United States. What we don't know is what will happen to the biologics. And because biologics are interesting, on one hand, they are behaving like generics, very competitive. On the other hand, they are brands. And so it's not clear even from the tweets or from the press release, what do they want to do with that? So we are awaiting clarity on that front, but unrelated, likely that we will have a CDMO in the United States for biologics.
Yeah, even on the earnings call, you said we don't yet know about the tariffs on biologics, and you spoke about the need for a backup. But I want to ask you, what is your backup?
So we will have an agreement with a company that has the license to make biologics in the United States, a CMO, and we will use their services.
All right. Do you want to name that company yet?
No.
Okay, I thought so. All right. Just last week, we also had the Financial Times report that U.S. President Donald Trump's administration is preparing a new investigation into drug pricing practices among U.S. trading partners. One of the things that he actually said while in the Oval Office with representatives from India for Diwali celebrations, I don't know if this was symbolic in any way or anything, but he basically said that a drug that costs $10 in London would cost $120 in NYC. A drug that costs $86 in Berlin costs $1,300 throughout the U.S. How do you see this affecting, whatever could come in terms of fresh tariffs and the pharma industry? Is it actually guilty of what U.S. President Donald Trump is saying?
So this is very relevant for the what you call the innovative products, the products under patent. And indeed, these products are being sold in the United States, in many cases, is higher prices than in other markets. And this is indeed the case. And indeed, that's what he wanted to deal with. Plus, he wants also to, some of these companies register themselves for tax purposes in Europe or other places, and naturally, they want to deal with that as well. It's not relevant for generics at all. So it's not relevant for a company like us, but it's definitely going to create a shift in which people will have to rethink what should be the global pricing strategy and how they do reference pricing in the future, because normally countries has a tendency to copy of what's being sold in other countries, what they call reference pricing. And the innovative companies will have now to rethink it. Probably what will happen is that the prices in the other parts of the world will go up.
All right. Would Dr. Reddy Labs, you guys really consider more localized production to mitigate the risk?
So, like I mentioned, in the case of the, first of all, in many markets, not just the United States, people are demanding localization. If you go now to Russia or to Middle East countries or others, almost every country wants to control their supply chain, especially on essential products. And in a way, also the United States. So it's not a new phenomenon. And as a company, we have to be flexible and to take transfer if this is what it needs for the same country, etc. In the case of the United States, like I mentioned, on certain products, especially, for example, biologics, likely that we'll have to make them United States. I don't see that case for generics because the economy in the United States will not allow those products to be competitive.
We have the 50% tariff on India, but there are reports coming from particularly the Mint that suggest that the rates could drop to as low as 15 to 16%. So I want to understand what kind of difference, if at all, that would make to Dr. Reddy's.
So again, we assume tariff zero, not 15% for generics. We don't know in biologics, as I mentioned. And if we'll make the biologics in the United States, it will be zero for the biologics as well. And just for the previous question on the pricing, the prices that we mentioned is not relevant for Dr. Reddy's. We don't have any product that we are selling in different prices around the world. What I mentioned, it's about the big pharmas, the innovative markets.
Well, there you go. Mr. Erez is really talking about tariffs and the future outlook for the company. I think it's very interesting out here, Manisha, that he's gone ahead and taken that assumption that I will predict effectively what Donald Trump is going to do when it comes to tariffs, 0%. That's a big assumption to make. The fact is that the pharma industry is huge. Yes, this itself is a $12 billion USD market cap company. But at the end of the day, we've seen that over the weeks, if you think you can predict what Donald Trump is going to do next, you're probably going to be wrong. and he's gone ahead and taken a 0% assumption on generics. Fine, he's not saying anything on biologics. But there's a market sentiment to calculate out here. Market sentiment, relatively muted, 1% barely increase or 2% increase. That's not a lot to say, but I am most excited about how this company is going to recalibrate, reimagine, because these are actually drugs that can help people. There's a cancer drug, there's an HIV prevention drug, which is going to go to 120 countries by 2027. That's when it starts. You have that weight loss drug. And of course, you have a nicotine replacement therapy that they've already kind of kickstarted.
And I think also that point about pricing was very interesting. And I wonder whether we'll see some calibration and equalization in pricing as we see many of these newer and bigger expanding competitors on the global market. Okay, Amitosh, thank you so much for that. And since they were talking about tariffs, we can continue with that subject. Amazon is saying despite those duties, Indian sellers have now crossed $20 billion in exports, including nearly $7 billion this year alone. The e-commerce giant has hit the milestone ahead of its 2025 target and now plans to quadruple that to $80 billion by 2030. The company says global demand for Indian goods like cosmetics, toys, furniture and apparel is surging, even as sellers face new U.S. tariffs. Amazon's exporter base has jumped 33% in a year to 200,000 sellers, many from smaller towns, which are fast becoming India's new export hubs. Well, speaking of markets, the markets have started their trading day. We will look at some of the movers and shakers in Mumbai after a very short break. Stay with us. We'll be back in 2. Welcome back. It's Inside India. Let's check in on the markets which are coming online. The Nifty 50 just trying to get above that 26,000 mark. We've seen it just tip over that mark a few times, but then coming straight back. So really flirting with the edges there of 26,000. The rupee, meanwhile, weakening to a 2-week low. Pretty much unchanged, though, for the Nifty 50. Now, lots to get you updated on. Markets regulator SEBI is looking to boost retail participation in India's debt market. In a new proposal, SEBI has suggested allowing companies to offer incentives like higher coupon rates or discounts to retail investors, including senior citizens, women and armed forces personnel. The move comes as public issues of non-convertible debentures fell sharply to just 81 billion rupees this year from 192 billion rupees last year. SEBI has invited public feedback on the plan until November the 17th. Let's look at some of the movers in the Indian markets today. India's Supreme Court has granted the federal government to reconsider billions of dollars in back dues owned by Vodafone Idea, offering a potential lifeline to the loss-making telecom operator. Following the ruling, shares of Vodafone Idea surged as much as 10% on Monday. That is the highest level since September 2024. The court has permitted the government to reassess the company's outstanding liabilities tied to adjusted gross revenue. The Indian government, now a 49% shareholder, after a debt-to-equity swap this year, has indicated it may provide relief, including possibly waiving part of the nearly 2 trillion Indian rupees in arrears. This is according to Bloomberg reports. Shares right now trading just a fraction higher, about 0.4%. On the earnings front, Adani Energy Solutions has reported a 21% drop in second quarter profit, meaning it's missed analyst estimates. The decline was mainly due to a one-time tax adjustment in the same quarter last year. The revenues, however, rose about 7% and operating margins also improved. The company says it expects strong bid activity to continue through the rest of the year. Those shares right now trading off about 1 2/10%. The shipbuilder Mazagon Dock has reported a 28% rise in second quarter net profits, being driven by strong margins and operational efficiency. The state-owned firm, which constructs warships and submarines for the Indian Navy, said it continues to make steady progress on key projects. The Indian government has been promoting domestic defense manufacturing, and Mazagon Dock aims to strengthen its order book under that initiative. The shares right now trading up more than 1.5%. Well, let's jump to, forgive me, one final check on Asia markets, which are a little bit like my voice, struggling a little bit today, all mostly in the red. We have the Nifty moving only fractionally higher, pretty much close to the unchanged line. But otherwise, we've seen all the major markets pull back. We do have that very important meet expected to take place on Thursday, that meeting between President Xi of China and President Donald Trump of the United States. And all eyes will be on whether or not there will be some finality in that framework that has been agreed between the United States and China on trade. All of this as Donald Trump is on the second leg of his tour of Asia. He is currently in Japan, currently meeting with Japan Inc., many of the CEOs of the big Japanese companies. But the Nikkei 225, of course, on all of that, is remaining above the 50,000 mark, but pulling back in Tuesday's trade so far. The Kospi also pulling back quite significantly, down more than 1% this session. We're keeping an eye on all stocks across the board. We have that rate-setting meeting beginning in the United States. It starts today. It will end on Wednesday. And the expectations amongst most analysts is that we will see a rate cut in the United States. So lots to look forward to this week. But for now, that is all the time that we have for you on Inside India. Stay with us on CNBC. There's much more coming back. Access Middle East is up next. Bye for now.